Hi Zero Doers, and welcome to this video on inventory valuation. All businesses keep track of the value of their goods in their inventory, but there are different options regarding how to value them. These different ways of valuing goods as they enter and leave your inventory are called costing methods, and Odoo has all three common ones. Standard cost is where you can set the value of a product right on the product record, so that it will always have that value regardless of how much you actually pay for it. AVCO, or average cost, is where the cost of all quantities of a product are averaged as they enter your inventory. And FIFO, or first in, first out, is where the value of the first unit to enter your inventory is the first value to leave as units exit your inventory.
What about first expired, first out, or last in, first out?
So FIFO, first expired, first out, and LIFO, last in, first out, are available in Odoo, but they're actually removal strategies, not costing methods. Costing methods determine how we value products entering and exiting our inventory, whereas removal strategies determine which physical unit is the next one to exit our inventory. Two other factors also affect a company's inventory valuation. First, depending on the company's location, they might use continental or Anglo-Saxon accounting. These are explained in their own videos, but the difference comes down to when you register the cost of goods sold, when the product is received in stock, or when it's invoiced to the final consumer. Secondly, some companies use a manual or periodic valuation method, while others use an automated or perpetual valuation method. With a manual method, accountants will have to make a periodic journal entry to update the value of their inventory as they buy and sell goods. With an automatic method, Odoo makes journal entries automatically when products enter or leave your inventory, so it's perpetually up to date. Here at Bloom, we'll use an automated valuation method, but we're still exploring which costing method is best for our business, so join us as we examine all three options and see how they work. So here we are in our test database so that we can make some transactions that won't affect our production database as we decide on a costing method. So let's first take a look at our products. And we can see that we have three products, one for each costing method. And the costing method is actually set on the product category. So let's open our standard cost gnome. And here we can see that we have the cost field set to 12 euros. And then we can open the product category. So each one of these products has its own product category with the corresponding costing method. Next, we're going to create a purchase order. And we'll go ahead and add our vendor plant world, and we'll add one of each product. And instead of 12 euros each, we're going to say that we're going to be purchasing them for just 10 euros each. We can go ahead and confirm this order, and then we'll receive it as well. Go ahead and validate the receipt. And now we can go to the inventory application. I actually have that open in another window so that we can switch back and forth quickly. So in the inventory app, we can go to reporting and then valuation. And we're just going to search for gnome to get rid of all the other products that we don't want to see. And it's important to note that you can find the inventory valuation here regardless of whether you use manual or automated inventory valuation. But here we can see that both the AVCO and the FIFO product are both worth 10 euros, whereas the standard cost product has 12 euros set on the product record, so it will always be worth 12 euros per unit.
That seems weird. Why would you not track what you spent on a product?
Great question. It does seem a little weird, but some companies use standard costs to compare their expected expenses with their actual expenses. So even though we're recording it as 12 euros in our inventory account, the bill is going to be for 10 euros. So then we can examine that 2 euro discrepancy and see that, for now at least, we've saved 2 euros on materials compared to what we expected to pay. So now let's go back to the purchase order. And we are just going to duplicate it. And this time, instead of 10 euros each, we're going to say we had to pay 20 euros each, and things were a bit more expensive. So again, we'll confirm the order. We'll go ahead and go to the receipt and validate it. And now we can go back to the valuation. So now you can see we have the receipt for each of these as well. I'm going to condense these so it's a little easier to see just the totals. So we can see that the AVCO and FIFO are both worth 30 euros, or we have 30 euros worth of product, whereas for the standard one, it is only 24 euros. So far, AVCO and FIFO are seemingly identical, but that's going to change with our next step, selling the product. So we're going to go back to our dashboard, open up the sales app, and we'll create a quick quotation to Acres Lawn Care, and we can sell one of each product. Excellent. So we're selling our products. We can go ahead and confirm this sales order and then go to our delivery and validate it. Now that we've done that, we can go back to our inventory app and see the results. So I'll just click here, hit enter to refresh. And now we have more of an idea of what's going on. So with AVCO, Odoo said that the average cost per unit was 15 euros. So 15 euros was removed from our inventory when we delivered one. With FIFO, Odoo remembered that the first unit we delivered was worth 10 euros. So delivering it removed 10 euros from our inventory. First in, first out. Remember that we're talking about our accounting value of the unit leaving the inventory, even if physically it happens to not be the first one that came into our stock. And finally, with standard cost, as expected, 12 euros was removed from our inventory. So now we've seen the difference between the three costing methods, and we know how to keep track of our inventory valuation in Odoo. That's all for this video. This has been your pal Dal. I'll see you in the next one.